My guest today, Kiran Mazumdar-Shaw, one of India's most respected business leaders and a true pioneer of the biotechnology industry. Now, as the founder and executive chairperson of Biocon, she's of course spent over 4 decades building one of the world's leading biopharmaceutical companies focused on affordable innovation. Under her leadership, Biocon and Biocon Biologics have emerged as global players in biosimilars, insulins, and next-generation therapies, shaping India's position on the global biopharma map. Ms. Shaw, great to have you today on ET Now. Thank you so much for joining us.
It's a pleasure for me too.
Right. I want to first talk about this integration that you've announced. Biocon spending over $1.1 billion in a share swap plus cash to take on Biocon Biologics to 100%. Tell me, what is the strategic inflection point that made this the right time for full consolidation? And how does this really reshape the group's long-term value creation story?
So thanks for the question. And let me start by reminding you that when we made this acquisition from Viatris, where we then looked at it as a way of capturing 100% of the value of this very important biosimilar segment, we had intended to take on an acquisition debt to fund the large acquisition that we had made. In fact, the largest acquisition in the pharma sector of over $3 billion. And the plan was to basically, take it to an IPO and raise the funds and basically address the acquisition debt and give the liquidity or the exit to Viatris through an IPO. But things did change from then on because our plans were basically not met with the exuberance and the excitement that we had felt of doing this transaction. We had expected to be rewarded for this very transformational acquisition, but on the contrary, the acquisition debt seemed to have concerned a lot of the investment circles. And we found that Biocon took a beating in terms of its own stock value. And by extension, the intrinsic value of Biocon Biologics also got impacted. And as a result of this, we then had to revisit our strategy of providing an exit to the equity investors in Biocon Biologics and of course to Viatris in particular. We therefore then mandated, the Biocon board actually mandated Morgan Stanley to evaluate various value creation options. And what you just heard a few days ago was the result of that evaluation, where we came to the conclusion that the best value accretive and value maximization way forward was to basically buy out the minority equity investors in biologics and make Biocon Biologics a fully owned subsidiary of Biocon. And really, it's a full circle, because when we did start off on this journey of biosimilars, we had created a ring-fenced biosimilars division with which we partnered with Mylan, if you recall. And that had brought in almost $1 billion of capital with which we built global scale manufacturing and very sophisticated state-of-the-art R&D infrastructure, as well as the pipeline, which has now seen 10 biosimilars in global markets. I think this has been hugely successful as a partnership. And I think what we're doing today is extremely transformational for Biocon because it now creates a very elegant structure. And we now have a very simple structure, which is product-led and in Biocon, and research-led in its subsidiary Syngene. Research services-led in its Syngene. So we have products on one hand and services as a subsidiary.
Absolutely, it comes a full circle. But tell me, Ms. Shaw, with the major Capex cycle completed and no significant spends now expected in FY 27 to 28, how does owning Biocon Biologics fully change Biocon's ability to sweat these assets and improve return on capital over the next 3 years?
Well, I think it's very obvious. I think the fact that we have the capital spends behind us, the fact that our R&D costs are now going to only reduce because of the new regulations, and the fact that we have a strong growth trajectory in all our businesses, and the fact that we have a unique selling proposition when it comes to biosimilar insulins and generic GLP-1s, I think this is going to be a very strong story of growth and value creation. And I personally believe that we will also get added benefits from this model, because we will get the benefits of procurement, or from supply chain, and from the very strong commercial engine that we have created at Biocon Biologics, which will allow Biocon's own generics to have a direct presence in many markets where they are partnered. So overall, a very, very strong, a transformational event in Biocon's evolution.
So the combined entity will operate in 34 self-led markets and 150 plus partnered markets as well. How will Biocon leverage this expanded global commercial infrastructure to accelerate launches like semaglutide, liraglutide, and of course others as well, all through FY26 and 27?
So one of the things I wanted to basically highlight is the fact that as when it comes to GLP-1s, I think the R&D and manufacturing capabilities are clearly an area where Biocon as a group will have a very, very strong competitive advantage. We are already in the leadership position when it comes to insulins, where the drug product facilities are very fungible when it comes to GLP-1s. And even in the area of drug substance and GLP-1 APIs, I think there are some very strong commonalities, especially when it comes to recombinant GLP-1s for oral dosages. So I think we have fungible and interchangeable facilities when it comes to insulins and GLP-1s, which gives us a very clear competitive advantage. But there's also fungibility in many other manufacturing of injectables and the biosimilars. So I think we see this as a transformational and a value accretive opportunity for us, where we will get tremendous advantages and cost advantages. And if you have seen recently, there's a flurry of activity in licensing biosimilars, because everyone now sees that biosimilars is the next big opportunity. And I think we are there already, leading in the top 5 global biosimilars companies in the world. And we believe we integrated companies will have a clear advantage over those who want to get into this space, because we know what the partnership model is, we know what the licensing model is, and we know what a clear cost advantage we have over competition who have to rely on in licensing and partnerships.
So post-consolidation, Ms. Shaw, BBL will be sitting on a $200 billion plus addressable market with a very diversified portfolio of insulins, GLP-1s, MAbs, peptides. Tell me which therapeutic buckets will drive the next wave of growth, and where is it that you expect the biggest margin expansion to come from?
Well, clearly Biocon, the biosimilars business will clearly drive a major part of our growth, because, this is a evolving space, and the number of biosimilars coming off patent are only increasing, and we are well in the leadership position. So I think we will obviously focus on building on this early success. But I think what is complementary to what we have done is the fact that GLP-1s are also becoming a huge segment, which everyone is very rapidly and increasingly pursuing. But again, we believe we have a unique proposition to offer, because we have the only company globally to have interchangeable biosimilar insulins and generic GLP-1s as a portfolio. So again, we believe we will have a very strong competitive edge. So I think over time you will start recognizing these strengths that we are now basically sharing with you. And it was all these parameters and factors that basically enabled us to come to this decision of creating one entity, a combined entity of Biocon and biologics, which will really give us that leadership and sustained leadership in the marketplace. And of course, apart from insulins, when it comes to biosimilars, we are leading in the oncology segment. We have a very strong position in the immunology segment. And the generic products that we have in Biocon, fortunately, also are complementary. We have a large number of oncology generics. And as you know, we've already been leaders in immunosuppressants, which actually adds to our immunology portfolio. So you can now see the shape of what our business looks like going forward. And we are very, very strong in leading ourselves as the leading biopharma country out of India, and of course, amongst the top five globally.
So tell me, bringing Viatris, Serum, Tata, True North into one uniform structure simplifies governance. What are the key synergies, operational, financial, or regulatory, that Biocon expects to unlock by simplifying the shareholder and integrating decision making under one single entity?
Well, the elegant structure that we're talking about is providing an elegant exit for all our equity investors in Biocon Biologics. And I think this is a win-win for all because all stakeholders benefit out of what we have just announced. When it comes to benefits, I've just mentioned to you that we will have significant benefits of bringing these businesses together, from common procurement, from supply chain, and from, of course, the whole commercial engine that we have developed at Biocon Biologics, which will then leverage what Biocon has in its generic portfolio. And of course, there will be other benefits from the resourcing of manufacturing and other enabling functions, especially IT. But I think I'd also like to mention here that the removing the minority interest from Biocon Biologics also is value accretive to profitability to the group and to Biocon. And I think there was some unsubstantiated commentary around being dilutive to EPS, but on the contrary, it is accretive to EPS, as can be seen when you recast the numbers at the H1 levels. You can actually see that there is actually going to be an increment in EPS earnings compared to what it was, despite the fact that we will be adding additional shares through the QIP. So these concerns are unfounded, and I think this is very important for us to mention that even profitability or PAT increases by 28% when you recast the H1 numbers, largely because you have eliminated the minority interests in Biocon Biologics.
If I were to talk about the next 10-year blueprint with you, ma'am, Biocon Biologics will soon be a fully consolidated end-to-end biologics company now with global scale and a massive one at that. Tell me, what does 2035 Biocon map look like in terms of portfolio mix, global market share, leadership in both insulins and GLP-1s?
Well, I think we should understand that a 10-year horizon is, of course, something that we will look at as an opportunity for Biocon to be right at the top amongst really the key leaders in biopharma. And of course, we have a huge pipeline of products, not just in biosimilars, but also in the generic side with the GLP-1s going off patent. And of course, we have other specialty generics and given the new regulations, we will have an even larger portfolio of biosimilars. And I think, we look at the next 10 years as a hugely expansive phase of our growth. The next 5 years is an accelerated pace, but the true opportunity is going to really, open up after 5 years when some of the key products lose patent protection, like the semaglutides and the Munjaros. And of course, you also have biosimilars like Keytruda and other big biosimilars also losing patent after 5 years. So it's really the 30 to 35, 2030 to 2035 period that will see this huge opportunity further open up for us. And we are prepared because we are right up there developing these products that will enter these markets at that time. And obviously, you can see that we are very excited and optimistic and ambitious about our leadership in biopharma.
But tell me, as Big Pharma also pivots very aggressively by the day into biosimilars, GLP-1s, competition is really intensifying. What structural advantages will allow Biocon to remain globally competitive against far larger players over the next decade?
Look, I think we have been very competitive even with the big pharma like Amgen and Pfizer in biosimilars, even now. I think when it comes to the path ahead, there will be competition because a large number of people are now rushing into this space, which clearly validates the importance of biosimilars, where a lot of people were, sort of sitting on the fence with a wait and watch policy, and now it's too late. Because to really be competitive and to really seek leadership in biosimilars, you have to be end to end integrated. Biocon will be one of the few companies globally to be fully integrated. And therefore, for anyone else to be fully integrated, apart from big pharma, and for big pharma, biosimilars is a fallback option, to buffer their development and approval timelines for new molecules. We don't see them as the competition, but we also see that the other competition that will come from generic companies who want to get into biosimilars will not be something that we can't face or challenge, because they will not be integrated players. And for them to be integrated players will take a long time. And until they keep licensing and partnering, obviously we have a clear advantage.
But with Capex winding down, margins set to expand, Biocon is going to be entering into a very strong free cash flow positive phase. What is the long-term capital allocation philosophy? Is it to reinvest for scale, pursue global acquisitions, or strengthen your balance sheet and sit on the cash?
All of the above.
You have to choose one.
I don't think as a leader I will choose one. I think you need to be very agile, you need to be very smart, and all these options are there once you have very strong free cash flow and a strong balance sheet.
Right. The other thing I also wanted to talk about was your unique portfolio, which is spanning insulins, GLP-1s, MAbs, peptides. It's a very rare integrated proposition that you have at Biocon. Over the long term, will Biocon prioritize innovation-driven assets or maintain its position as a scaled global biosimilars powerhouse?
So, I'm glad you're recognizing the unique and strategic objectives of Biocon which have been realized today. And I'm glad you put it that way. Now, obviously, as an entrepreneur who's very driven by science and innovation, I have basically focused on novel drugs, novel molecules. As you know, we are the only company who has actually brought three novel drugs to the market. We started with Biomab or Nimotuzumab, which is obviously brought to the Indian market, but not beyond that. We brought itolizumab also to the Indian market, and we probably have plans to take it out of India. And we brought, the bispecific BCA 101 or Bicephalus to global markets. And I mean, we are now in the process of developing this through Bicara. Bicara was a spin-off of Biocon. Bicara is a very successful company in Boston. And I think that tells you about the capacity and the capability that we have in developing new molecules. Going, looking to the future, obviously, if we have a lot of free cash flow and a strong balance sheet, and which enables us to basically start investing in true innovation and cutting edge and first in class kind of innovation, we will do that. But we will do that in a very judicious and calibrated way, which obviously will further add to our value.